Alrighty, hello everyone, and welcome to the Monday Open Stream. Of course, it's good to be back. It's good to be live, and it's good to see all of you guys. Welcome to everyone that's joining us. Got Whale, Chicken and Chips, Professor G, Heat Trader, Wayne, Nico, Chris, Big Silver Dog, Dave, Joseph, Hola Cueto. I like that name. SMP, and many, many others. Welcome, guys. Thank you very much for joining us here on the 17th of March Open. Obviously, every Monday, it seems like this year has been like red. And today it's a mixture. We've got red down in the Dow. We've got a little bit green now in the US 500. We'll talk about whether we think there's a bounce coming. Obviously, the bad case scenarios, the good case scenarios, and everything in between. We'll be covering stocks, commodities, and cryptos. And as always, I just wanted to say a big thank you to everyone that's been posting comments recently. It's been really cool to read some of the comments and see some opinions, some success stories. Ultimately, of course, gold doing well, China market's doing okay, silver kind of coming up as well in recent times, and the US 500 possibly finding base. So let's get started with the US 500. Here are the updated high and low figures from the options market today, guys. And if you watched the weekend video where we talked about whether we might see a bounce, we went through quite a lot of pretty compelling information. Obviously, we talked about the dark pools, okay? A few of those coming through in these levels. We talked about the huge macro oversell signals, which, of course, is that fear that's being generated at the moment. And we talked about, of course, the puts that are absolutely everywhere at these levels. What we didn't necessarily discuss, though, was too much about price action. So obviously we'll go into that in a moment because there are some key levels you need to watch. So here is what the market is expected to hold between 68% of the time. According to the options market, we should stay in this particular price range. If we do break 5,700, of course, that would take us back to that 200-day moving average, which would be 57, I think 50 at the moment. So I kind of like the idea of a 200-day moving average. And if you don't already have this on your charts, make sure to get the simple moving average on your charts. It's as simple as just literally adding something like this. SMA 200. I like to make it green, and then whatever you want to do with it next. It seems incredibly likely we will rally to this point at some point. And yeah, it's going to be good. 1 second. I'm just getting a chat coming in. Let's see if anything's going on there. Thanks, Tom, for your email follow-up to the Perth event. I'll be taking a look at that. No worries. Thank you very much, Sunshine. Appreciate it. And thank you for coming out to the event in Perth. It was great to meet you in person. It was awesome to meet, actually, a few people around Australia, hoping to do the US, Canada, UK, Europe, at some point in the future. It'll be awesome to get out there and meet you guys in the community. I mean, let's be real. I've been here doing this 5 years now. We're about to hit 200,000 subs, thanks to you guys. And it's been awesome. All right, so US 500, good news is that we're probably oversold. The bad news is that doesn't mean that you can't hit these two levels, but the key ones of possible buy areas are 54.75 and 5,400. I find it very hard to be under 5,400 for very long, even if that does occur. It's kind of like the base bad case scenario. The good case scenario is that 200-day moving average plus, which is very likely. If you actually go through history, you'll notice that when you take the 200-day moving average, there's a very good chance you'll buy back into that range. And this area here, I think, is super key. So obviously you want to be making sure that you're paying a lot of attention to what happens here. If we take a fib, because what we often like to do is to look at Fibonacci. So let's grab a fib here. We do delete a couple of fibs, but we leave the main ones on. That would take us back to a 38.2 Fibonacci kind of retracement, which would be this kind of standard, we would say, aggressive trend to the downside type of retracement. A 61.8 would take us to 5,900, which is where we saw previous supports a little while ago. And of course, that would be also a possibility. And if we manage to get through there, highly likely we're going to an all-time high. So I thought I'd quickly run through some bear and bull case scenarios. Would you guys like that in the chat? Would you like me to walk through some? I mean, we kind of know a lot of the bull case scenarios, but I thought I'd write through some of the bigger overarching kind of storylines. I think the big storyline is, of course, going to be corporate tax cuts. Will they come? If we get one, what's it going to look like? When's it going to happen? and of course deregulation. I think these are still the two main bullish sentiments of the US market. And of course, the bear market sentiments are how long are tariffs going to sit in place? How much selling do we have to do to get rid of the leverage as well? Some of the leverage that's been put in from retail traders. I'd suggest that we have seen a lot of that kind of play through. And then, of course, there's just the general geopolitical tensions, tit for tat, this, do this, what's exactly going on. I actually have a question for everyone that's in the US. I thought I'd have to ask this. Anyone out there bought a car recently? And I want to ask this because we asked this of our community, our private community today, and it looked like somebody had gone and purchased a car, and they said that it was pretty busy. And it makes some sense. Are people trying to rush to buy cars before potential tariff increases? What are you guys seeing out there? Anyone here own a car dealership? We've got people from all around. Let us know in the chat. Very, very interested in that. 5,400, everyone will buy, which is why I'm not sure it'll get there. But yep, that's a good point here. That chart looks like more pain to come. So this is, of course, the S&P 500. And that would be, this is definitely a possibility as well. So this is a distinct possibility. I just feel like this is very likely. The 200-day moving average is a very, very, very likely hit. Of course, you make your own decisions. But if you go back through and you do your own analysis on the S&P 500, guys, I think you'll find the 200, once taken, does bounce back. And that is pretty reliable. We also know there are a lot of trades that have gone in through that 5750 zone. So that's going to be pretty key here. Retail sales announcement expectations and its effects on the markets today. And it says here, don't think most people care about the economy when buying a car here, rates, etc. Okay. I have to buy a car and we don't have tariffs on our cars in Canada. Yep, well, different area. No car purchase from me. Hell no. Not a new one. Only buy used. F new cars. This person's an investor, guys. Look at this. This person's an investor. They're not stuffing around. They drive a Honda Accord Euro. That's what they drive from 2006. That person's driving that. Absolutely not. Car is the worst investment. Yeah, you guys know what's up. That's not wrong. I wonder if that person does drive a Honda Accord Euro. That would be so funny. I'm in the US. Girlfriend sells cars and homes. It isn't slowing down. Okay, there we go. Incredibly slow, slower than a long time, says INF. Are you in cars, INF? Interesting. Tesla is in trouble. Different type of thing, though. That's totally different. My car is like 11 years old, and I bought it secondhand 8 years ago. This person's literally got a Honda badge in their name. That is funny. They're driving a Honda Accord Euro. That's what's up. VZ Commodore. Only Australian would even know what that is. That's for sure. I think you can just get into a VZ Commodore. You just get a coat hanger out and chuck it in the window, and you've got a free VZ Commodore. Or is that a Kia? Or was it a Hyundai or something? I heard in America everyone's stealing Kias or something. US 500, either way, we've got here the low. Of course, we've got a oversold level. I think on merit, if this is kind of your worst case scenarios, this becomes a very interesting level. Of course, most people that I saw on Twitter and X and everything, they were basically saying 5,500 or, of course, the obvious 5,400 range. That makes it so that it's a little bit more encouraging with the relief rally to the 200 to come off where we are right now. The level I would watch, though, is if we dial in on the smaller time frame, and we'll do that together right now, will be probably this high here, about 56.50. And we're looking for a closure above 56.50 because that will mark three lower lows. So you've got a lower low, and a lower low of the low. Yeah, bit of a tongue twister. And you've got here the 56 kind of 50, 60 zone. Now, this area here, I think, does for the first time change trend, at least on the smaller time frames, and for some people swing to the upside. And that just has not happened the entirety of this fall. And we've made a big deal about this. Every time it's gotten to this exact kind of point here, it's failed. And that's where we are right now. So, even here failed. So it's always been a series of lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. So, of course, that has been very, very consistent. Last week, we saw a couple of encouraging signs. Can anyone guess the most encouraging sign? Other than the VIX, of course, getting crushed back down. What's another encouraging sign that we saw? It's a stock. Anyone in the chat know? Every YouTube finance channel and news. Gunslinger says, is this for the level, Gunslinger? I have 2006 Ram 2500 diesel with 110k miles on it and won't buy any new diesels. The new diesels are terrible. It's the stop-start technology, the emission laws. They're going, stealing Kias, it was a TikTok thing, I believe. There you go. Real estate and cars is very geographically dependent at this point in time in the US economy. You're not wrong. It's very important to definitely recognize that real estate anyway is going through. And Stacy says, I keep getting calls to sell mine and get an upgrade. They're desperate for your upgrades there. Stacy, they want your money. That's what they want. Jensen Huang Stock PN says it. Yeah, I do think that's the big key. So let's look at the second thing here that I always do. I always love to see the NASDAQ not making a low. So that is not making a lower low, while the S&P 500 does make a lower low. And that's exactly what we saw last week. And of course, we talked about it in our video, and kind of it showed us that we actually talked about it through here. And it showed us that we thought we might be starting to place a low. And of course, this looks like a double bottom to a lot of pattern traders. It does look like, just a standard kind of base formation at this point. But the importance was no new lows. So the S&P did do that. At the same time, we got NVDA actually changing trend to the upside. And it's actually up again in the pre-market today. So this is a series of lower lows and lower highs. So again, in price action, basic terms, this is pretty much just a standard downtrend. And something's changed. We've gone to a higher high. We've started pushing back into positive gamma territory. We obviously have 125, 126 this week. And that will potentially trigger the rest of the market actually saying, you know what? That was a heavy sell. We're ready to recover it for at least the little bit here. Check out the MACD. You'll always see MACD in your favor in this case in terms of divergence. But if you do want a MACD indicator, guys, use MT4 MACD. It's probably the best one you can put on your TradingView platform. And I love this MACD indicator because it's very easy to spot your divergences, and you'll get generally those showing through. So if you use like a 2-hour here, you're obviously going to get your divergence, market slowing down, divergence here. It's going to be on NASDAQ. It'll be on all of them. So if you have a look at NASDAQ, we'll just do that together so you guys can see it. So you get significant divergence. Now, the reason you get significant divergence, if you're not aware of what the MACD indicator is it's basically just moving averages. So you've just got, if you actually look at the indicator itself, you'll recognize that there's across a moving average, and there it is, 1226, 9, and you get basically a very, very consistent read. You're always going to see it this way. And that's why I don't tend to have it on. A lot of people do talk about it a lot. I don't mind MACD divergence. It's a great visual tool, but yeah, I don't use it too much because we always going to know how it looks. Once you've done, probably about 500 hours of charting, you're going to know what most indicators are doing before you even put them on the charts. Anyone here up to that point? I'm sure you guys are. Thank you also to the over 1,000 people that are joining us here live for today's stream. Really appreciate it, guys. We actually forgot to go live on X, but sometimes that happens. The X stream, it can be laggy. I did forget to go live on it though, but thank you very much. Give it a thumbs up if you enjoy the stream. So US 500, the key levels you've got on the charts. US 100 are definitely a positive sign. NVIDIA, the evidence builds. And then, of course, another one that we talked about was this, which is, of course, the technology stocks that have been oversold. So this is not exactly technology, this one, but the point is that what I was showing you in the video on the weekend was that less than 3.5% of XLK was actually above its 20-day moving average. And traditionally, that has got whipsaw kind of rallies that usually come with it. So we got that whipsaw rally that can often come with that. So I thought it was worth noting. We're also oversold on those. Another one that I thought I'll put in today's close video is the actual valuation on Google. Now, I just want to mention this because the MAG stocks are obviously one of the things that most people will look at for a recovery. Generally, if you're going to get a recovery, a quick one, the best stocks to go for are high gamma stocks. These types of things are these ones that get brutalized very quickly and then they rally really quickly. So mag stocks are of interest. You'll notice here the potential of an island reversal. We're probably not going to get it today because it's 0.02 down, but you've got like a lot of potential build here, and you gap back up on Google, and all of a sudden, you've got some decent runway here. I'll just show you guys. Look at the percentage here of the low to the high. You can believe it's actually 27.7% down. So that's no slouch in terms of drop. And Google's PE ratio is actually kind of interesting. There are reasons why it's down at these levels, but yeah, kind of interesting. Good demand zone in here. Whenever you're looking at these things, what you should always be doing is fixed ranging it. You'll notice you get at that very solid area of previous, well, I think it's purchasing based on what happened with the price. So it makes sense this could be a good level or wall for us to be accessing. So at this point, again, you can confluence through the mag stocks. In fact, if you look at mags, we'll do it together now. If you look at mags, and let's do it again here, this one will be right on the same level. So you've got a decent amount of confluence through these areas, guys. And that always encourages me. When you hit a confluence zone, we always say this, if you've watched the videos for a while, if you watched us back in 2024 during that August collapse, which I don't know, in some ways seems scarier at the time for a lot of people because of the ferocity. But I guess this one is probably more terrifying depending on how you feel about the world right now. Generally speaking, that these confluences are so important. Back then we saw a confluence of, I think it was metals, semiconductors, the NASDAQ, the S&P, and so many things hit on the same day. This one is, of course, a confluence of mag stocks, a confluence of technology, of NVDA kind of turning, of Tesla also, which is possibly bottoming, although the news is quite bad for Tesla. There's real impact to the sales. I mean, it's not just a flash in the pan. There is truly a bit of a movement going on against Tesla, and I see it. I see it. Like here in Australia, people are just like, let's buy these cheaper, very competitive Chinese cars. BYD brings to boot. People are just buying it, guys. They were already buying it, frankly. It was just so much more competitive. I mean, they bought out some truck ute thing that does like I drove it. It was all right. It's like a 5.5, 6 second truck. I think some of the Americans have got hold of a couple of them. They're like, what is this thing? It's like a 1.6 liter hybrid engine ute thing. I don't know what it is, the Shark. And people are buying it and they're absolutely going crazy for it. So competition, I think, is the key here. And obviously you've got to start saying, well, is this more than a car company? And I guess maybe we'll do a poll. I'm actually really interested to see what the audience thinks of this, because I always get people say, Tom, you don't understand, it's an AI business. And I say, look, I just understand price action and flow, man. I don't really care about the fundamentals too much on it. But let's see what you guys think. I'm actually really interesting here. So we'll start a poll here. And you say, I'll just say Tesla. Is Tesla more than a car company? I guess. And then we'll just give a yes or a no in terms of value. Okay. And I mean like more than a car company, like more than just like the car company. Oh, that's a bit of a stupid question. We should ask a better question than that. We should say, basing here. All right. I was going to say, do you guys reckon Tesla's basing here? There we go. You just go the price action. We won't ask the question of whether it's more than a car company, because it obviously is. Who's buying today to D1? Yes, Tesla is way more than a car company. Yep. Well, I know. That's why it's a stupid question. Reboot Tom. Cars, batteries, robots, they have remote kill switch. And Elon already... Oh, the remote kill switch. I don't know what that is, Squeaky. I don't know if I'll read the rest of this. Tesla has nothing that other companies don't have. The fact cameras only self-drive is ridiculous. So, people, whoa. We've started everybody. We've triggered everyone. We're asking a simple question instead. And the question is basically, is it going to bounce here or not? Okay, there we go. So the reason I actually bring Tesla up is because it's actually between two really interesting levels, 250 and 220. 220 is an exceptionally good base level. You've seen huge dark pool trades around this level. And it's actually a very interesting case here because this is the power of the reason why I actually asked the question is nothing to do with what we care too much about the answer. It's the bias that we have, okay? Because people are polarized towards this stock. And the reason I want to bring it up is because this year, 2025, is about no emotion, okay? And no matter how you feel about something, you've got to be able to go past that point if you're going to be a trader and investor. You don't have to obviously trade and invest Tesla if you don't want to, but you've got to do it when you're starting to think about the storylines. Did the stock get thrashed? Yes. Is the stock getting thrashed in the news? Absolutely. Okay. Absolutely getting thrashed in the news. It's down 56%. But at the same time, you'll notice here we get this big wick rejection off the level that we discussed. We know that there are puts down here. We know that there is a call wall at 250 to 260. Now, there's no doubt I think it's at resistance right now in terms of temporary. But when you go down to the smaller time frames, all of a sudden, if you're breaking through the 260, you're going back into positive gamma, it could push a 300 very, very quickly. So I think you've got to keep your eyes on the prize here. You've got to say, okay, well, I don't need to trade Tesla, sure, but I think this is just a symptom of the market itself. I said this many times. We've talked about it this year together in 2025. This is the year to not really have too much emotion when it comes to investment and trading. Because usually whenever you feel something, so let's say you say, yes, I feel that this trade's going to do well. It tends to not do well. In fact, I want to change the poll. Dump this poll. You guys are 50-50 on it. Let's do another one. All right. Well, I don't want to start Q&A. What is this? You were literally 50-50 on the other question. Okay, here we go. All right, here we go. We're going to ask this question. I'm actually interested. All right, here we go. That's the question. All right. Let's see. Oh, it says, my emotions are dead. I've got nerves of steel. Okay. I tried to buy Tesla at 220, but I can't get them. I certainly based just above 220. Yeah, so if you have a look here, you get 220. It did hit, but it was only pre, I think. Only pre. So here it is. Let's talk Meta. We'll look at that. Copper. Yep, sure. What else we got here? How's net looking? Okay, I haven't looked at Cloudflare in a few minutes here. More about relative strength and whether it's basing or not. Will it bounce hard or not? You don't actually really want a super bounce hard. Sometimes that can be a ferocious market. So actually, speed is very important though, Lobo. So to back up the speed kind of claim there, we've got 90% thrust on Friday. I don't expect us to get an 80% today in the session, but that is a very, very, very solid kind of uptick in markets. It shows that it was a risk on across all algorithms. And that's kind of, it's an interesting stat. As I proved, it's not necessarily a guarantee of anything in particular. We shared the data on that. We'll continue to track it. But if we start to pack in, let's say, 3 big trade days over the next 10 days, well, that could be a very good sign that markets are actually in proper recovery. Emotions have left me holding the bag and trade vesting. Yeah, this is a good story to always remember, guys. It's super important here. So this is a great poll. I actually think everyone's being truthful here, which is awesome. We've got 83%. I'm going to actually end it here just so you guys can see it. 83% of respondents, 84%, when you followed your emotions, 300 votes or 240 votes, pretty good. When you follow your emotions, have you generally won or lost? Lost 83%. I mean, this could be a very profound day for someone out there. If I know that seems like nothing, and you say, well, what the hell are you talking about, man? That, in essence, should 100% completely change the way that you think about investing and trading. Every day that you ever feel something and you go, oh, like you get really fearful or you get very greedy. According to the poll, most people lose off that. 83 to 84% of respondents said that when they feel those emotions, they make crap decisions. So, guess when you're going to make the best decision? Potentially when you feel fear and you actually go greedy, or you feel greedy and you actually go towards the fear side. And the reason why that is because you're going against what necessarily your huge emotion feel is. And that's because it's generally that you're being influenced by so much around you. It's a very, very confusing world out there right now. And you're going to get a lot of information that possibly is not well thought out. That eventually affects us. So it's a very profound statement there. Thank you very much, guys. So yeah, we've got Tesla kind of on the lows. You guys are talking about Meta. Let's have a look at all these mag stocks. Actually, we'll just do a quick cross section because these are all at interesting levels. Let's have a look here at Meta. I would argue Meta, of course, long leg doji on the weekly. Very good demand zones here. You don't really want to lose these areas either because if you think about it, it's been a series of higher highs and higher lows. Meta had that epic rally up to 750, just before 750, 740, 730-ish. And it's come back down to 600. I mean, these are considerable moves in terms of real valuations. These are 20% down across the board. Is that on base support? What do you guys think? Is that a decent base support? Let us know in the chat. Inverse emotions is like inverse Kramer. Yeah, pretty much. Isn't there an inverse Kramer ETF at the moment? The stock market and Zen Buddhism book needs to be written. You're not wrong, Andrew. That would probably be pretty good. AAPL was the hardest hit. Was it really? I mean, I feel like AAPL has been doing pretty well. Kim says these are boring levels. I don't think they're boring levels. I think they're good levels. If those 83% stop trading, I wonder who would win. Yeah, that's the point. You know, this is the thing. People think, wait a second. Okay, our communities. Okay, you guys keep it a secret. Okay, don't tell anyone, guys. Don't tell anyone about that poll. Okay, we don't want anyone else to know because it's kind of like if you ever played poker. Anyone ever played poker? Anyone ever sat there on a table and seen some absolute moron berating someone? They call them a fish. They call them a fish, and they're sharks or something. And they yell at them and they say, "You're a fish. You make stupid call or something." Dude, you want that person to be there. Are you insane? Are you insane? Stop berating the fish. I mean, people have lost their minds. It's the same in trading and investing. Technically, yes, you are correct. You do need people to not be as informed because this is the game of, someone wins, someone loses. That's how it is. Awesome poll. We got to do some real stats to generalize to trader/investor demographic. Yeah, I think it is actually. We might do that every week. You know what, Mitch? We'll do one every week. I'll get a poll. You guys like this idea? Let me know in the chat. Every week we're doing the live show. I'll think of a question that I already know the answer to. Well, I probably know the answer to, but I believe is a profound understanding of investing and trading. And then we can get your questions. We can get your poll through. And to somebody out there, it's probably going to change the way they start to perceive the markets, which is pretty cool. Institution is a good buy, but day trader, you are tuned into a zone. Yep. Whenever I get excited about how much money I'm making, it's time for me to sell and correction is coming, Seb Fox says. Yeah, remember MSTR a little while ago? I'll just tell you the story. I was talking to this guy. You know, he's a good guy, smart guy. And we were having a chat about it. Anyway, I saw the next day a post of his came up and then a post of somebody else's came up. And one of the posts was like, that feeling when you make the same amount of money that you made in a year in just one day. And I thought, shit, it's over, boys. It's over. The next day, MSTR craters. I was like, it's over, guys. That feeling when you're making years worth of salary in one day, bam, the end. That literal next day. Yeah. All I see is short-term upside, then more downside based on the fibs. It's certainly a possibility. We will be going through it very heavily together. 200 days seems to be the most likely on the S&P that you want to be looking at this stage. We've got Meta kind of base. Let's go to the next one. Let's have a look at Amazon. We got Amazon. I wouldn't really say like what I would call like an epic level for Amazon. I don't really understand this level too much. But Amazon is down at their previous resistance supports. To that level, it's not really interesting. But Microsoft, failure stock of the last year, frankly. Obviously, one of my favorites back in the past. And I haven't been talking about it for a while because I haven't actually liked it for about 6 months. I did like it over here. But yeah, 6 months of nothingness here. Again, doesn't really excite me too much. It will if you see good rallies on it. But for now, it's, yeah, sideways. And then, of course, we've got Apple here, which got pummeled there near the end. You're right. Actually, whoever mentioned that before, we've gone from about 15% down. It needed to play catch up to the downside. And it seems like this is actually not on support. So I would say Apple does not look good technically. Anyone like that? I don't like that much. I do not like that much at all. I literally yell no emotion on a daily basis. No worries with that, man. I'm just like, you want emotion for the no emotion. It's a good idea. Got to yell the no emotion. Don't be an idiot and buy mega stocks, says Kim. Mega stocks. Please, what's a mega stock? Mega caps? Look for China stocks. Well, we've already been talking about China a lot. Of course, we'll go that in a minute. Now, this is, of course, a movement um is in like effectively you need to think about markets movement of funds and flow. We've seen movement into China. We've obviously seen movement into the rest of the world. And actually, if you start tracking this, in fact, I've got a code. Oh no, did I bring the code with me? Yeah, I've got the code. One sec. I'll just load this up and I'll show you guys. It's pretty interesting here. And okay, so we're just going to put this in here. So we're going to put VEU, and VEU is the all world excluding US ETF. Okay. And what I'm going to do is I'm going to slash it versus SPY. And what this is going to do is it's going to show you a trend, all right, of US exceptionalism for a long, long time, and why this is actually something that is occurring underneath the hood that people don't really think about. Have a look at how long US exceptionalism has continued here. This is, remember, the all world index excluding the US versus the S&P 500. Wow. You want to talk about the US being number one for so long? Look at this, guys. This is horrendous. That is a chart of death for everything that isn't US related in terms of performance gain. But something did change just a few weeks ago. And you'll notice that all of a sudden we've started to change trend. In fact, we're actually at a point now we're about to make a higher high. So when you start looking at the fund flow, there's no doubt that fund flow has been going outside of the US, especially over the last kind of month. We all know this, but this chart just really, I think, visually shows you how big a trend this has been on the downside. And if you start to load that through, you can really get an idea of why it's so important that the US starts to actually play catch up if it is going to around here. Otherwise, you are going to see more flows go through. Now, we will go to the next one. We're going to go to the Chinese market for a moment here. Just to mention, more stim, more talks of stim, partial stim here coming out. There is an M1 chart. I'm going to get the M1 chart for you. Look at this. I'm going to share it. One second. I just got to hide screen in case some kind of crazy thing comes up. One second. Here goes. I don't want crazy things going up on it. I learned a long time ago. You don't press the crazy things can happen. Once upon a time in a different time age, I remember I worked in the tech space, and this guy's like comes in. He goes, "My laptop's not working." And I said, "Oh yeah." It's a long, long time ago. And I said, "Oh yeah." And I took it out of hibernation, and dear God. That's all I'll say. I was like, bro, I don't know what you've got here, what's going on, but that was a weird, there was all sorts of things going on. China money supply M1. Take a look at this and have a look at that. M1 in China. I'll put this into the end of day report, but that is absolutely here some wild action in terms of M1. Look at the M1 acceleration. And yeah. You can't say that's not some stimmy. That is absolutely stimulation. It also could encourage, there could be some dangers here as well. So there's a vertical chart, guys. Just if you didn't know, there is actually a line here. I'm just going to draw it so you guys can see it. That is the line. So you can really see why China had a big turn last year, and how this has really created that exceptionalism of at least the last couple of weeks and months. Bit extended, well, not really, because it's creation money. So this is this I don't think is necessarily extended. It just shows you here the amount sloshing around all of a sudden. So very interesting chart. We'll talk more about it at the close of the day. So of course, does that encourage you if you're in this market? Well, yes, it would. And at the same time, you've just got that kind of series of higher highs and higher lows. I'm not a big one on picking stocks in China, because I think that, it's just not that great. I like to pick ideas. I think that there's plenty of catch-up stocks that could go through. Of course, everyone always looks at Barber, but you've just got to remember that there are a lot of consolidations here at the highs. If they break out after sitting, then of course it's going to be further strength. Interesting market nonetheless. Go through some precious metals here for a moment. Gold. Well done, guys. Long journey, but we did it. $3,000. And you know what? We did it on spot. Look at that. It took 2 years. It was a journey from the 1700s. And I did take a little bit of profit off the table. But then I got greedy, and now I changed my number to 3,600. Anyway, I'm sure quite a few of you are in gold. Anyone here in the chat in gold? They're now reporting account balances in social apps for China M1. Interesting. Yeah, I did think that was pretty vertical. That's very interesting there. China portfolio of the best is the way to rebalance. Real estate stocks. Oh, sick. Yeah, not in gold, always in gold, says Thomas. Yeah, well, that's good. Your target was 3,600 by the end of the year anyway. Well, it was actually 3K always, but yeah, 3,600 I'll go with the end of the year. Okay, we can change it to that. So what do I think about 3K? I would just keep reminding people that unfortunately gold does tend to have little weird hiccups around the double zeros. We've seen that in the past here with 2,000. Obviously 1,000 happened a very long time ago, but yeah, we did have a lot of hiccups there for a while. So you do need to take it with a little bit of consideration. Dark pools also coming in at around this level. And I will admit, I think that in terms of runway, silver is more interesting than gold. And the couple of reasons why that is, someone mentioned copper before, is the dollar weakness. So the dollar, if you look at 2017, this is kind of how the US dollar acted. If you go to 2025, this is actually where we are right now. So if we continue to follow this path, there's a good chance that metals, not so much gold, but useful metals, could be on the rise. And that's going to become evident when you look at copper. So let's actually look at copper before we go to silver. You're going to look at the weekly here. Look at that. Very strong weekly, signaling a potential all-time high for copper. Now, I will say it's interesting to not have oil running hard. Generally, when you look at copper like this, you'd usually see copper rising, you'd see oil rising, and you'd see inflation. Okay. Now, I have a question for you guys, just a generalized question. Let's see. New poll. All right, here we go. I'm very interested. We won't talk anymore until we get your answers. Isn't copper related to China? Yeah, for sure. But China is, of course, potentially M1ing as well. And if there is M1, that obviously is partially in what we just saw before, which is suddenly some new information coming out about all the money sitting in the online WeChat wallets. Then at the same time, copper, metals, yes, okay, they're going to run off China and the stim. But we also might get, some interesting inflation stuff. Gold just got rejected off the trend line. I would say that gold at 3,000 is definitely a very, very tough point. Is there a chart plotting oil price versus GDX? I do love that. A great comment, SMP. So if you take US oil and you obviously price it against GDX, what you'll often see is that you want, or in general, this is not the plot chart that we're actually looking for, but what you can do is you can put GDX and you can actually see that it relates to oil. And the reason is GDX is gold stock. Obviously, one of the biggest inputs is services, but of course, at the same time, it is also energy. So we've got oil cost uh, is a big deal because that's what they run the machinery with. Gold is incredibly expensive to get out of the ground. So when you have a low oil price, technically gold stocks does better. And it's actually been doing pretty well recently. Thank you, Tom. I'm going to take some profit this week on my gold. You kept me in gold and kept me out of Enphase a while back. You're the man, the best on YouTube, in my opinion. Appreciate that, Greg. Also, thank you to the almost 1,500 of you guys that are joining us here for the Monday Open. Appreciate it. Yes, Enphase was a horror show. It really was one of those ones that was going to go bad, especially very bad, depending on how the election went as well. Oil will run. I tend to agree that's possible. What's your take on QPU, quantum processing units being run by AI, quantum annealing to be priced? You know what? I'm just going to put this on the chart. We've got a lot of engineers in our community, a lot of software guys, a lot of people in the know. Maybe someone can post a comment on their opinion on this. I must admit, from my understanding, and it is limited, while I believe in AI, I totally think AI is the future. I think quantum is obviously a very interesting phenomenon and concept. I'm not sure if they're there at this stage. So maybe someone in the community can tell us, what's up. If they work in the industry, if you don't bother answering unless you're an absolute geek on it, because the main thing is with this stuff is it's all going to be about timing. And right now, it's, I think, sugar rushing. You really do need to think about it more. And I believe after a crash, it's going to be the time you want to buy that stuff. D-Wave is up over 90% this week. Does anyone think China will collapse the US dollar? No. Quantum computers are still very, very unstable. Yep. Quantum won't be product ready in the next 100 years. It won't have killer apps, not even AI. Okay. AI is the future, but we're way off currently. Mostly a parlor trick. I think it's like Google search 2.0. Quick look at AMD. Sure, we actually will do that. Probably out today near all-time high now, if this is D-Wave. So let's have a look at oil here for a second. So we saw copper really breaking up. Oil, obviously, on the lows. This is super significant. I mean, everyone knows. Everyone knows. I don't see many people talking about oil. I think a lot of people lost faith. And obviously, at this point, is the point where you're looking for structural base. We've kind of got here a long leg doji. We've actually gone above that already this week on the open, which is strong. And if you go to the 2 hour, we're about to change trend on small time frames. So if we manage to break through 68.50, I think that's a pretty positive sign for oil, and obviously something that I will be looking at. Now, for the poll, 65% of you believe inflation is going to return big time. So there you go. I would say that's probably in line with the economists at this stage. Most people think inflation's around the corner. If I look at the 1970s overlay, what happens is inflation goes back up and then stagnates for a bit and then goes hyperactive. And that would be the worst case scenario if that was to occur. I'm a software developer on the front and the developer for the past week. I haven't written a single line of code. AI is writing all for me. Now it's moving quickly. Oil could come down to the level until US production isn't profitable anymore. I don't know what that is. If memory serves me, around here is unprofitable for US production, somewhere around 65, I think, a barrel. Can someone tell me break-even barrel for US producers? Intel, please. Yeah, Intel's a very cool chart. We'll do AMD and Intel right now after silver. Let's do silver. So I obviously like silver a lot. Love the weekly close. Pretty bullish on silver. Not sure if it's a great level to get in right now. I'd say this is a TP for some break-even traders, for day traders and stuff, swing traders. But to me, this is kind of like the beginning, I believe, of a nice move in silver. Silver has the properties that could move if the dollar weakens. So the US dollar is obviously doing that. So if the US dollar is weakening, Similar to copper going up, I believe silver will follow with those other metals. So silver is actually going to potentially have play a pick up here throughout the rest of the year. And I'm liking a 40, 45. That's what I'm looking at here. Silver will be at 69 by the end of the year. 64 a barrel is break even. Thank you, Mark. Okay, let's do AMD. 64 a barrel. So we're basically pretty much in a very good level for oil if you are feeling bullish, I guess, when you think about it that way. AMD, I love this level. I love this level. So if you obviously we saw dark pool at 120. This level is my second level. We talk about this a little bit in our private community. If you're interested, fxevolution.com, try it's free 7-day trial, that type of stuff. This is a super zone. I love this zone. Now, what did we get last week? Anyone know what that is? Potentially. Can you discuss the Russell? Yes, we can. Silver is industrial, just like copper. We need demand to pick up. I don't trust copper as EVs are not taking off in the US. I'm not going to fall into the idea of any particular thing here. Let's not go with narratives. Instead, just go with price action. Copper's doing what copper's doing. So tweezer, yeah, that's pretty much correct. Could be a tweezer low. Very nice very nice low bottom here for AMD. It's a very decent sign, guys. If this can get, it's like similar to the rest of the market. If this can get through a 103, remember, this has been, I would say, if I'm not wrong, heavily bought by retail traders and investors. Since when did first people start really wanting to nail AMD? I feel like it was like up here in the 160. So I obviously did talk about it at 120. Not going to say I didn't. I saw some dark pools in here that were interesting. I'm very confident AMD will get back to 120. I wouldn't like buying 160, frankly, but a lot of people were in it about 160 and 180. So a lot of people are super under the water. I wouldn't be surprised if this wiped people out. And yeah, it's been super negative. I mean, it's just a series of lower lows and lower highs. Last time we got like any bullishness was about here, and it failed at that supply. I do like this bottom base. What do you guys think in the chat? I like the bottom base. I don't mind it at all. I think it's pretty nice. Let's just go and have a quick look at it again. Bottom base looks pretty good. Volume is meh. I'll have a look here. I'll actually look and see if I can find any large transactions that have gone through. AI-driven QPUs are solid for niche problems, logistics, finance, drug discovery, etc., but they're far from quantum supremacy. Real breakthroughs in scalability and coherence are needed. Basically, we talk about 5 to 10 years for simple industry in applications at a bare minimum. There we go. So we got big. This person looks smart. Look at this. Andrea knows. Okay, there you go. Like that. I like that base. Pretty nice. All right, let's have a look at Intel. Excellent. If you pick this up, actually did discuss this quite a few times over the last couple of streams that we've done. And yeah, I like the base for Intel. I think Intel is being positioned as a bit of a government win. And I do always say the government money is not bad money to follow. You'll notice here the volumes are just, guys, look at those volumes. Oh, the volumes are good, guys. As a TA expert, I would say I like that quite a lot. That is very, very hot volume at the back right there. And in general, this is just a standard. This is way more than standard. This is Wyckoff's third law in play in terms of the way that you just see this huge basing structure. If you get this type of volume, it usually means there is a differing opinion. Obviously, there's a huge buyer and a huge seller. They've got a change of the guard. I think they fired their old CEO and got a new one. And obviously, the TSMC news is big. My first TP on this remains at the same price, $30. So yeah, I do like it. Shorting NVIDIA long-term put leap. I don't know if you got enough time. That could be okay. Tariffs will have an impact on prices in 2 to 3 months. Only then will inflation rise dynamically again, meaning that we'll see inflation above 3.5 to 4%, May, June, no rate hikes anymore this year. Yep, it's a valid concept. So that's yeah. XRP coin keeps seeing outrage claims. Outrage claims. Tom, maybe the first higher high across the board will be similar trap than it was in Intel. No, I think this is pretty solid. Oh, you mean like if we get above a higher high on the S&P? Um, oh, there was a big buy over the last week that clearly like last 3 days of last week were some purchases were coming in. We saw the dark pools, we saw large transactions. We did see what we really usually want to see at those lows. We saw some action. That's not to say like a lot of people actually a few people in the comment section said, "Oh, you're just going to be bullish. Screw you." I watched 7 seconds, saw a meme about being bullish, and then quote closed the video. I'm like, bro, you watched 7 seconds, and then you come in a comment. I guarantee that person watched the video. But either way, yeah. Look, I am very concerned. Don't get me wrong. I am very very concerned about what the market's doing. I'm concerned about this chart. I like it. I don't like when you look at it on a 1 year basis and you're starting to say, well, wait a second here. What is exactly going on with home builders? You know, one of the leads to often market activity is getting absolutely destroyed. That's not a good sign. Big dark pull up here is not good either. You got to be a realist. You got to say, okay, what are you trying to do? A few weeks ago, about early Feb, I mentioned that I'm no longer investing heavy. And that means that basically I've already said since last year, and I maintain it, I'm not using lever anymore. Lever is gone. I think that investing is at these levels is partially dangerous. And I said that up at the highs. And the reason is because, and you guys know I said it, the reason I said it is because leverage. The retail trader is going full ham. People are going, it's 42% of the entire US household is now in the market. You can't imagine that isn't happening across the world into the US market. So people are levering in, people are going ham, and that's exactly when I don't want to be ham. So yeah, you want to think about that way. LYC is rare earth Aussie MP on the US. This is actually an excellent Linus actually shows. 1 second. Now, Linus Rare Earths actually has an excellent price action base. So you can see here again the metals trade with the US dollar weakening really coming through. Rare earth minerals. A lot of this is basically the W word that I'll write on the screen because I don't like saying it on YouTube. But basically, yeah, a lot of this rare earth minerals in particular are going to be in massive demand as everyone's gearing up now. REMX. Yeah, REMX is a VanEck strategic metals fund in the dirt, by the way, literally in the dirt on price action. Big trade volumes, though. Notice here last week, all of a sudden, oh, hello. Could do worse than I think some of these rare earth minerals are right now. I don't know. You guys agree in the chat? You disagree? Let me know. I see lumber being replaced with concrete in many places. Are we going to get back to the S&P 200 moving average number? I put it up before, Peter. It's 5750-ish, 5753. REMX is rare earths. That's right. REMX is rare earths. Interesting base, though. Already showing signs of recovery over here. And then obviously these big volume bases suddenly coming through in 2025. Interesting. NVDA 125, 126 target this week. Could pull back to support area of one. Yeah, I'd agree. That's pretty good levels. Yep, some stocks that we can look at that were wild. Let's have a look at some of the oversold stocks. First up, Reddit. Reddit got thrashed. To me, this is the end of this stock's run. So I would always say any recovery should be now sold as price action base. This is, in my opinion, over. When you get these types of huge rally ups, you get these massive outlier candles, and then you get thrashed the way it's been thrashed. Very unlikely that it will hold a recovery. So I would say most people will bail. This is a huge bail from the market. Now, do I like it? Yeah, I don't mind it to 160. I think it's pretty solid on smaller timeframes. If you go to the daily, You'll see here, you've got a little bit of a turn and consolidate here. I'd like it to 160. Let's have a look at PLTR. So that's a bit of a better business. Didn't fall as much as something like Reddit, but you'll notice again that we get that gap fill, and there will be, I believe there'll be a recovery. These stocks tend to recover. You don't go from being that bullish on a stock to not seeing recoveries after these dumps. I'm going to show you a case, okay, so you guys can see. A lot of people forget these old past histories. So let's have a look at ARC, which obviously got thrashed in a similar way, and it still had some recoveries here. So you've got to be wary. This is a thrashing, okay? Now, this is the fund. Let's have a look at a stock that was inside of these funds at that time. So let's have a look here and I'll show you. So we use, what the hell is block called now? What is this? Geez, I always forget. Square block. What the hell is this thing called? Why do they keep changing this term? Someone give it to me. A, B, C, X, Q, Z, X, Y, Z. Absolutely ridiculous. Trash. All right, let's have a look here at the trash. Okay, so the trash over here, same period of time, you'll notice gets flogged quite a lot of percentage. So you lose around 33%. And then it obviously rallies up. But that was basically the end. The end is here. And everything else from that point was just like some random stuff that kind of went on. Let's have a look at Zoom. Again, big thrashing, huge thrashing, 36, 37%. Sound familiar? There was a relief rally. Okay. Relief rally ended up bouncing about 32%. Couldn't do any more. Does that sound familiar, guys? I really think that's a Reddit. And, it's pretty consistent. That is cooked. So do I think it'll recover somewhat? Yes. Do I think it's going to go back here? What do you guys in the chat think? Reckon that's going back up there? Stupid XYZ. Uranium picked up off the bottom. It did a little bit there. Is there any truth to Trump trying to crash the US bond market to lower US debt, which is due this year? Yeah, I mean, there's a lot of stuff going around to argue each way there. Well, if you weaken the dollar and you create instability in the market, then people will go to bonds, which will weaken the long term. People will buy bonds, which will also in turn weaken their long term yields. And if you weaken the long term yields, then of course you've got a cheaper overall, usually yield rate. I don't know. That's not it. Look, there is a lot of stuff going on. I think I like to deal with stuff that you can actually use to gain edge. Now, is that going to give you enough edge? Probably not. So there are other things I think that's going on. XQZ, XYZ, X, who knows? It's ridiculous. Reddit is misaligned with US voter base. Well, I think regardless of that, is that really a US based trade? I don't think so. That's not a aligned base trade to do with politics. This is just basically a bust of a high and a traditional type of recovery that you usually get. All right, let's have a look at the Russell 2000s and the Dow. And we'll just have a quick look here at the Russell 2000s. Probably on support, you'd have to think 2000, massive psychological level. Russell 2000 at 2000, you know what I mean? Big support, big level. You can also go through here and use fixed range, and you'll notice that we're trading in what I would call like the boundary area of the most traded zones. I haven't seen what I would call like a massive transaction coming through the Russell, which I think is usually a key thing. It has hit into what I would say is support, but I don't think it's showing the same signs of strong recovery as a market like the US 500 or US 100. People are looking for exceptionalism companies, and you're just not going to get them here in the Russell at this stage. So do I think we're at a base? Yeah. Do I think we'll recover? Well, of course, I do think we'll find a relief recovery, which at the moment we're looking for in these two. But I wouldn't use the Russell at the moment as the base structure. I'd use the S&P. We'll have a look at the Dow, see if the Dow is giving. I don't really bother looking at the Dow much, as you guys know. Look at the Dow probably 10 times a year. And most of the time, it's just to say, wow, I know why I don't look at this. Of course, double top is the theory on the Dow. Break below, again, not losing structure, not ideal. Is it oversold? Yes, technically it is. Is it due for a relief rally? Yes. Is it giving us anything? No different to the S&P, no better than the S&P. So when you look at the Dow, it doesn't really tell me much here. Qs are definitely better than the Russell. In terms of structure codes, yes, at this stage they will be. What happened to the BTC short wheel? So you mean short going down into the 68Ks? Well, look, BTC is definitely the best chart for crypto. And I think you almost need to disconnect crypto and Bitcoin in the future. I believe as a potential, I am a Bitcoin maxi. Okay. I am observing on Bitcoin certain phenomenon that I would liken to gold in a big way. And it has nothing to do with the old argument, oh, gold is real and you can touch it or something, and Bitcoin you can't. It's actually to do with money print. And I'm witnessing with statistics that Bitcoin is following a very similar path. Is it risky? Well, actually, in Sharpe ratio, it's not as risky as you'd think, considering the returns. But I do like Bitcoin. I would actually decouple Bitcoin with the crypto market to a degree and say, I don't like this price. I mean, if I'm investing, I'm not buying this. There's no way I'm buying this price. I truly believe we're going to get cheaper price at some point in the future, and I'm going to buy more at cheaper rates. But I do think in the back of your mind, you should keep in mind that Bitcoin, I believe, is going to trade similarly to gold in the future against print. And I think that's really, really, really important. NVDA just recovered. Oh my goodness. Someone's going crazy. Well, let's have a look at a moment. 84.5 to 85,000 is the break for Bitcoin. You can easily see it on 2-hour chart. Basically coiling at this stage. We'll get a move, I would say, this week that's going to be quite large. So someone's mentioning that Bitcoin, that NVIDIA is going, and you trolled me. It's only up 1.3, which is pretty much the same. It all bleeds. BTC King. Yeah, BTC is good. Tom Lee announced BTC is going to outperform gold this year. Ugh. Tom Lee. What are you doing? BTC, the rest is crap coin. You're not that wrong. You're not that wrong. Yeah, it is true. BTC is the best. I like BTC. Has it? You know what I like most about BTC? That they came up with that logo, and for some reason, it's just always looked good. Ethereum logo, not bad either. But some of these other crap coins, my God, they get some ugly logos, guys. Bitcoin downside target 73K 68. When you hear all Bitcoin bros in complete despair, I may buy. That's a very fair scenario. Put up 8.9%. Not a fan of Solana. They're good coins, of course. They're all fine. But you're talking about application versus Bitcoin. Bitcoin has got nothing to do with it, whether it's good network chain or not. It is showing similarities that I would liken to money print. And to me, that is a very important reason of why I like gold. It's also the second largest options trade nowadays on Bitcoin. Not a fan of the Pepe the Frog logo. No, not the coin. What are your thoughts on Adobe? Had a trade on it, dropped. Do you think I cut my losses? You have to have that plan before. Adobe, yeah, that was a beautiful invest, head and shoulders, went up. Typical Adobe earnings came out, busted on down. So I guess the good story today, guys, is that NVIDIA is rallying. The other good story is that markets seem to be trying to plug that high, which is to try to return back to the 200-day. I think the 200-day is all important. 57.57. 57.57. Hey, there you go. I'll just write that down for you so you can easily remember that number. 57.57. Daily 20 moving average there as well. It's going to act, I believe, as a dynamic resistance. If we manage to blitz that, then we go to the 61.8 fib, which sits at 5,900. And if we then pull back off that point, I think we'll have to think that there could be good rally. If we hit this 200 and we come down and make a new lower low, we don't have much to support us. If we go underneath here, very bad. Not good. Okay. This is not good territory. We do not want to be in the not good territory if you're a bull. If you're a bear, you celebrate the not good territory because that's, yeah, we might have to reassess a lot of things. What does this all mean for TLT? What it means for TLT is that TLT will probably go sideways for a little bit while yields stabilize. So you've got here treasuries at 90, very good level in my opinion. Certainly not a bad trade level, or not investment level if you're thinking about that. You got to remember US 2 years starting to go up. A little bit of movement here into the Fed announcements this week. We have the FOMC on Wednesday. I'll show you what we've got today. So obviously we've seen this. And second, we'll get that core retail up here. Where are we? 17th. Core retail sales 0.3, 0.2. Retail sales underneath expectations. I don't know what's the number. I'd have to look into it. I don't really care. The main thing with these particular numbers, and I'll assess them at the end of the day. That is at the close. Obviously, you saw a little bit of an uptick there off these numbers. Move the yields a little bit higher. I'll assess them when I bother looking at them. But what I always say with this red news is that if it's not unemployment, that is jobs numbers in the non-farm payrolls, and it's not like generally CPI or the Fed, you don't really care. It's irrelevant. How many core retail? I always say this. Do you remember last month's core retail sales? I put my hand on it. I tried to put my hand to cover the number, but you guys are going to say, yeah, I remember. Oh, I remember that number. All right. Let's ask a different way. Do you remember the PPI number from last week? How many of you truly believe that? How many of you really remember that number? Really Messiah says no. Powell needs to cut rates, aka stimulus. We see a boycott of US products all across the globe. When will we see this reflected in the figures in the US economy? Yes, that is an interesting one. Are people truly doing that, and how long are they going to do it for? It reminds me of that Gillette ad that pissed everyone off years ago, and then everyone said, I'm not going to buy Gillette products. And I remember you look at the back of these products and you go, what the hell does Gillette own? Turns out they own everything. They own everything, guys. Just walk around Gillette. And it's like, well, I didn't know that was Gillette. It's Gillette. It's all Gillette. Everything's Gillette. It's Coca-Cola. Everything's Coca-Cola. Everything's Gillette. So I'm not sure how long that's going to last, but sure. The point is you never remember those numbers. Most of you should not care, as Pirat says here, because it's irrelevant. It's a compilation and all of these numbers together. And that's the big thing we're about here on the channel. Everyone goes crazy about, the PPI, oh my God, the PPI. And they go wild on it like it matters. It doesn't matter. It's all about building the price action, building the evidence. If you don't realize that by now, you guys got to start realizing this. Markets will have an excuse. The excuse right now is tariffs to push it down. And there was really, what was the excuse? Everyone was levered. The tariffs certainly don't help, but everyone was levered. And Wall Street went, activate Optimus Prime. And then that just destroyed everybody's money. And that's pretty much what they did. Some encouraging signs here, 56.50. Market obviously trying to rally. Again, daily 200, daily 200, daily 200 key level. So mostly the narrative doesn't matter. It's the price action and what's going on. Would TLT be better or worse than shorter durations give a high level of uncertainty? I don't mind treasuries. It doesn't really make sense for me being Australian because our dollars in the crapper and the US dollar seems to be kind of turning towards the downside, which means I have dollar risk for the first time in a while. Yeah, I mean, it's a good question. I have to think about it a bit more. I don't like to answer if I don't know. The best a man can get, Gillette. Yeah. Gillette Tesla buyout. Only CPI matters. Jobs numbers will matter. Non-farm jobs numbers. Only Powell can remember. Powell has that written down. Don't worry, he's put it in his diary. Tesla owns Optimus Prime. There you go. Manufacturing numbers, -20. Recession is coming. Okay, interesting. Technical analysis. Why did the SPY go up if retail sales are less than expected? See, you're trying to look for the narrative. Why does it matter? I can make an argument. See, if I said to you, okay, well, all of a sudden, did you look at the retail sales number? Did you break down each section, each core section, which is what I'll do at the end of today? That may be important. There may be something in there that I haven't bothered looking at yet, and you might want to check it out. The other thing as well is you might say, well, wait a second, yields are up. Again, if it makes little sense to most people, yet it's doing it, just go with the flow. The best days sometimes are the days where everyone's left scratching their head. I'll liken it to this. Stock looks like this. Earnings result comes out. Earnings result is 10% better than anyone expected. No, 50% better than anyone expected. And the stock drops 10%. Okay? And everyone's like, ugh, market's rigged, man. No, the market went up 100% leading into the earnings result, which would meant that it was bonkers. It was a buy the rumor, sell the fact. You get what I'm saying? So look at the left-hand side. And with that, guys, we're going to leave you for today. Thank you so much for being live streaming with us. We're going to start implementing that new poll where we can learn something each week about markets. I really like that idea. Got some great stuff to share with you. I can already think about everything that's going on. But generally, let's do a synopsis here. The market is oversold. It's oversold. I think this is the level that doesn't make sense to anybody, which is why I kind of like it. And I know that everyone has this, and 5,500. And you'll notice it stopped just before 5,500. So I could see us recovering to the 200. The 200 is the question mark. Okay, that is the question mark. Definitely is the question mark. So we'll be watching that quite a lot. Obviously, gold, I think, is hitting a very, very critical resistance. Might go through 10, 20, 30, $50 an ounce, but I think it could consolidate here. We must continue to watch metals. We must continue to watch dollar. And also, I think you need to watch oil, because if oil starts to break out to the upside, that could be a concern. We just heard before that 64-ish or something like that was break-even rate for a lot of the US producers. So we're basically trading around that point. And do remember, you have to expect the unexpected. Markets will do whatever makes as many people as possible seem stupid. So if you keep thinking about that, then you'll kind of know why it's moving the way it is. Stevenson 720, as always. Tom, thank you very much. Great stuff. Oh, I could do with some of these overseas currencies. I went overseas a little while ago and my Australian peso wasn't worth anything. I said, hello, fine, sir. And they said, hello, what do you want to pay in? And I said, Australian dollars. And they said, do you have any of those American dollars? I said, I can't afford them. All right. Thanks so much, guys. We'll catch you later. Appreciate it. And we will see you hopefully at the 200 very, very soon. I'll also see you at the end of the day and we'll talk about it. All good. Catch everybody. Bye for now. See ya.